Hello everyone, and welcome back to another weekly analysis video by Traderbook. My name's Ramon, and today I'll be taking you over some weekly analysis on US oil, WTI, and some XAU gold. Now, just before we get started, I'd like to remind you that this is for educational purposes only and do not use this as any investment advice. And I would also like to remind you to subscribe to our YouTube channel to receive more content and free additional content on weekly analysis and other content that we have coming in the coming months. I would also like you to go to www.traderbook.co.uk if you'd like to visit one of our mentorship programs. Just check out what kind of stuff we have on offer. I myself run my own program on there, so if you like what you see and you'd like to take trading seriously and start making some money in the markets, then by all means go ahead and enter yourself into that mentorship on my page. Just to get straight into the analysis, guys, let's go on to USD WTI oil. Now, we mentioned in the previous weeks that we had some serious consolidation going on around this price level, which we discovered that $54 would be the resistance point, dating all the way back to 2019 over here. Like we mentioned before, we have a very strong resistance level here that was a very strong support level. So we were just looking at price to sort of consolidate in this kind of area here that I've drawn up here, which it has in the past weeks. As you can see, we've had some quite a lot of price action here, but it's just more sideways action, as we expected, to be honest, before we get that break downwards. We did really focus on maybe meeting this trend line, which again, if we go on to the weekly time frame, you can see has been holding for since 2018. So we really want to kind of use this momentum here, the sell side momentum, to sort of meet the confluence of our trend line, and then we can start taking this down all the way. Now, this is the weekly analysis, so I should have really actually started on here because we work from monthly, weekly to daily before we get into all the other time frames. So on the weekly analysis, what we have here is, as you can see, last week, as we mentioned, that it would be good to see another pin bar form on this time frame on the weekly, and you can see obviously over here that we've got this wick. So this pin bar, this pin bar over here gives us a bit more confluence onto the downtrend that's about to come on US oil. Obviously you can tell over here that a lot of buyers are running out of steam and sellers are getting into the market. This could be a correctional move to the downside, but until we see any sort of action above $54, I would not be buying oil right now. Just again, like we mentioned before in the previous video from last week, I would really want that $51.50 mark to be broken to the downside. Now, as you can see here, it kind of has. So I'll obviously go further into explanation of why I still believe that we didn't, but that'll be for a little bit later. So yeah, we've got this pin bar now forming here, and now today, obviously this is the new week. Today's Tuesday, so yesterday and today we had a high of $53.26, which means to us that we've got lower highs now than last week, but we would really want to see this candle for the weekly close to confirm that. But it's going towards our trend of making them lower highs and lower lows. So we want to see a real push down this week. I'm leading off towards more of a Thursday, Friday push down, just because there's a lot of price action around them 2 days, especially since we will be going into a week where we would see a lot of action in terms of price movement. So going down to the daily here, again, sideways movement. We've got a big old pin over here, which a lot of people would have got in on, and obviously you could have made a good fair amount of pips here. Price going from all the way to, say it closed up around here and you got in at 52.95, went all the way down to 51.50, So a nice little catch here, but I wouldn't have gotten in anything here. I'd like to see a bigger move, so I will wait for that 51.50 to break that price level here. And let me just go back and quickly get you guys to understand why I wouldn't, even though price did touch this 51.50 level, why I wouldn't have entered for a short position. So why would I have not sold, is mainly due to the fact that price did not break that level. It literally practically bounced off it. So we had that 51.46. What we do in our trading here at Traderbook is we focus on positions that hold out, meaning that we would want to see a full-on break of this level, and since we did not see that, we did not enter any shorts, which would have been a good thing. So sometimes it's good to stay out of the markets and just be aware of what they're doing, and wait for another pullback and a bit more of confirmation. So as you can see here, we've just been pushing up all the way to that 53.21 mark, and now we're pushing back down to that 50.40. I would expect some more momentum to the downside before a bigger move down towards that 50 mark. Again, $50 is a big psychological level. Banks play a lot on psychological level, so I would be very wary of that $50 mark when I do enter this trade. But once we do, we'll have some pretty good trades to rely on. So yeah, that's where we're looking at for oil. A lot of sideways movement, and a lot of to be honest with you, a lot of pressure from on buyers now to see this out. So it'll be interesting to see what would happen in the coming days. Obviously this isn't my main trade. We would have other trades going on while looking at this trade, so we wouldn't be too busy on focus on one market entirely. But yeah, we will be definitely looking at this in the coming weeks, and I do obviously expect to see a bigger push down, hopefully next week, if not the week after. But yeah, we do have a lot of levels here to meet, and what I really like about oil, especially with the chart that we've had going on in the past couple of months, is that we have a lot of clean slate runs, which basically mean that we don't have a lot of support levels, obviously, because we've just been going up and up and up. So we can get a lot of clean runs towards the downside when we do push down, which will make us obviously maximum profit, and that's what we really want. So yeah, that is what we're looking at from US oil for this point of view. Obviously, better analysis will probably come next week, or when a big move does play on. But sometimes we just need to sit on the side and just take a look at what's going on, and then as soon as our confirmations have been hit, that's when we take action. Last week about this descending channel over here, we mentioned about this support zone over here, and we also mentioned about that fake out, which is a freight breakout over here. Now obviously you guys know, once we do break out to these trend lines, we look for further move downwards. We haven't really had that at the moment. What we had here was price to go down out of this trend line and quickly come back and then break highs of 1873 on a daily time frame. So this gives us a little bit of more indication that gold is trying to just find buyers in certain areas, like over here where we've had that 1800. So we are looking for buyers in this moment, but I would not want to buy anything until we break that 1900 level. Now that 1900 level is a key resistance area, and we will be looking to break that, and once we do break that, we can start looking for buys on gold, and obviously we can hit targets of the all-time high, which is at 2070. So there's a lot of profit to be made from this pair. What we really need to do is find a moment where we can push up all the way out of this channel, and of course maybe retest this trend line that we've got going over here, which has been holding for quite a long time, actually all the way back to March. So if this trend line does hold and we have a touch on the trend line outside of this downwards channel, so we really want price to actually to just really hit around this area here, and then what we can do around this area here, which is that 1832 level, is find another support zone on this trend line to then start entering buys and then we can shoot straight up, because gold always does go up. Overall, obviously on a yearly time frame, we've had gold going up for years and years and years, so I would never want to short this pair. And we have such a good setup going on. A lot of sideways movement does usually indicate that people are just taking back and waiting for a good price to then get back in. So banks, institutions, everyone is right now on the sidelines with this pair. Gold has taken a little bit of a hit, but I wouldn't call it bearish at all. So I would wait and want to break this channel over here just to be safe, because we don't want to have any sort of confluential risk. And over here we've got a trend line which we can use as a point to buy, and then we can take it all the way up. Whether I'd sell at this point is, you know, is a story for another day, because I do believe that gold will pass this and we can get that about 2300 mark quite soon, to be honest, next year. But it'll be very interesting to see what happens in the next couple of days. And then next week I can give you guys another further weekly analysis on where I am with gold and where I am with oil as well. So guys, once again, if you really like the weekly analysis from any of our mentors at Traderbook, visit www.traderbook.co.uk and sign up to our mentorship program, where we give you the in-depth detailed analysis of every pair and market that we're trading. And we trade a lot of markets and we make a lot of pips. So guys, please head over there, and don't forget to subscribe to our YouTube channel. Just type in Traderbook on YouTube. We're usually that big T with the blue in it. So I'll be looking forward to seeing you guys on our next videos, and we will have more and more content coming towards you guys as long as you want us here. So it's been a pleasure, and hope to see you guys next week.